Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
Earnings crossing the wire, Qualcomm.
Indeed, Qualcomm. And let's go right to the outlook. Fourth quarter revenue, they're looking, folks, for $10.3 billion to $11.1 billion. That's above what the street is expecting, at least on the higher end. $10.61 billion is what the street's expecting. Fourth quarter adjusted EPS, more for the outlook, $2.75 to $2.95. The estimate on the street is for $2.84. And again, seeing, let's go back to the past quarter. Third quarter adjusted EPS, $2.77. That's better by a nickel in terms of what the street was expecting. And third quarter adjusted revenue of $10.37 billion, pretty much in line with what the street was expecting, Tim. $10.33 billion. Stock little change, just down about 0.6% here in the aftermarket.
Yeah, pulling up that earnings release here. The company, actually, it's not even up yet on their investor relations website. That's how early these numbers actually came out. Worth repeating, the fourth quarter revenue outlook, though, does seem to be what is moving the stock in the after hours, ever so slightly bouncing between gains and losses, down about half a percentage point. The company says the company says CapEx at $785 million. The company also said third quarter adjusted revenue coming in just above estimates at $10.37 billion. Once again, fourth quarter revenue, that outlook, $10.3 billion to $11.1 billion. The estimate was for $10.61 billion.
Yeah, the promising sign in there, Tim, would be that there are signs of resilience and growth in the smartphone sector. And of course, we'll be waiting for a read through on that when you're thinking about these large technology giants, the consumer exposure matters here a little bit. The high-end phones, though, are where they're doing even better. And so the question about that K-shaped recovery throughout the course of this earnings season resumes.
Yeah, and it's kind of interesting, too. We should point out we're also expecting to get earnings out of ARM, the UK chip maker. And of course, we're waiting on some of the big heavyweights in the indexes. That includes Microsoft, Meta, also expecting Ford, Albemarle, Lam Research, eBay, and Western Digital, amongst others, guys.
Yeah, and it's just a reminder that not all chip companies are the same. So Qualcomm may be giving a little bit of a better forecast, but we've been getting from Texas Instruments, Intel, which also gave more cautious outlook. So it's just a reminder, you got to take a look at each of these companies and what their fundamentals are and really what markets they play into.
Ford reporting in just a couple of minutes. We've got an interview with the company's CEO coming up in just about a half hour. We're also expecting, of course, Meta Platforms a little later, too.
Yeah, I've got to say, just to kind of get back to what we were talking about with Qualcomm, remember, this is a stock that's only been up 3.5% this year. So there's a lot of room here for the upside if investors choose to read it that way, but you're looking at it turn further negative here, down about 3%.
All right, Microsoft earnings are crossing the wire right now. So too is ARM. Let's start with Microsoft. The initial knee-jerk reaction to the upside as the company says revenue in the most recent quarter, $76.44 billion, a beat. The street was looking for $73.9 billion. Intelligent cloud revenue also coming in slightly above estimates at $29.88 billion. Azure and other cloud revenue, ex-FX, up about 39% in the quarter. The street was looking for a gain of about 34% in the quarter. I just want to point out one other quick thing. I know it's a much smaller business, but when it comes to the productivity and business revenue here, you did actually see a beat there as well, $33 billion. And on the personal computing side, Tim, Carol, $13.5 billion. Street was looking for 12.7.
I got to say, I was curious about in terms of valuations for this one because Microsoft, fascinating to watch the trade here because it's bouncing around. I mean, this is a stock that's up 22% year to date, and we are seeing off of these numbers initially a gain of about 5%. So investors definitely liking what they got. I've got to say that Azure and other cloud revenue, maybe that's what's catching their attention, up almost 40%. They're up 39%, and that is easily beating the estimate of 34.2%.
Yeah, Satya Nadella, chairman and CEO of Microsoft, saying, quote, "Cloud and AI is the driving force of business transformation across every industry and sector. We're innovating across the tech stack to help customers adapt and grow in this new era." And this year, Azure surpassed $75 billion in revenue, up 34%, driven by growth across all workloads.
And Even beyond that, I'm looking at CapEx numbers as well that came in for the quarter at least lower than expected. So that outperformance comes on the heels of not overspending either. I know a lot of investors are out there looking to make sure that they're getting a return on their buck. And you are seeing Microsoft just surging after this report because, to your point, Carol, Azure was really a big part of what investors were looking for and making sure that more and more of that revenue was being driven by those AI initiatives.
And I guess I would say when it comes to AI, you got to think about the Microsoft relationship with ChatGPT. You know, they are kind of the king, queen, if you will, in terms of what has set us going in terms of AI.
Yeah.
We've got Ford crossing the Bloomberg
Yeah,
terminal.
let's go to Ford for a second. We'll get back to Microsoft. Those earnings crossing the wire. Remember, the company had removed its guidance a quarter ago. It is now reinstating that guidance for the full year, and it does appear that guidance is lower than the one it gave before, saying that it expects earnings before interest and taxes, so EBIT on an adjusted basis, $6.5 to $7.5 billion. The low end of that range is slightly below the average of street estimates, which was for $6.84 billion. Also interesting, the company is trying to quantify the impact from tariffs, saying they see a tariff headwind of about $2 billion. That's up from a previous guidance of about $1.5 billion, though they did point out that that number could be as high as $3 billion, though they expect about $1 billion in mitigation, if you will. Not quite sure what that means. That brings it back down to $2 billion.
Well, speaking of high numbers, Meta shares surging in the after hours, up about 3.6%. The company sees third quarter revenue at $47.5 billion to $50 billion. The estimate was for $46.2 billion. The company sees total revenue for the year to be in the range of $47.5 to $50 billion. It sees expenses to be $114 billion to $118 billion. So expenses were expected to be $113 to $118 billion. Second quarter revenue, once again, beating estimates. Second quarter EPS coming in at $7.14. That's massively above expectations of $5.89. Second quarter revenue expected to be at $44.83 billion. $47.52 billion is the print. Shares surging in the after hours, up 6.7% and climbing.
Yeah, and that's after Meta has been quite an outperformer. It's up about 19% year to date. Hey, let's go to some commentary and context. Company saying they expect third quarter 2025 total revenue to be in the range of $47.5 to $50.5 billion. And they say while we are not providing an outlook for the fourth quarter revenue, we would expect our year-over-year growth rate in the fourth quarter of 2025 to be slower than the third quarter as we lap a period of stronger growth in the fourth quarter of 2024. So they expect full year 2025 total expenses to be in the range of $114 to $118 billion. So that's narrowed from their prior outlook of $113 to $118 billion and reflecting a growth rate of 20 to 24% year over year, and currently expect 2025 CapEx, including principal payments on finance leases, to be in the range of $66 to $72 billion, narrowed from their prior outlook of $64 to $72 billion, and up approximately $30 billion year over year at the midpoint.
I also want to look at ARM here as well because they're forecasting profit lower than expected. They're ramping up spending here. You do see shares down more than 5.7% after the market, after saying that fiscal second quarter earnings will be 29 cents to 37 cents a share. Analysts had seen 35 cents on average. So there you go. Softer profit expectations there.
All right, real quickly, eBay, those shares higher in the after-hours trade guidance for the third quarter of $2.69 to $2.74 billion, above street estimates on both the low and the high end of the range. For the most recent quarter, the company did beat on both the top and bottom line, revenue growing 6%, Tim, to $2.73 billion.
All right, shares of Robinhood up 4% in the after-hours. The company's not giving a 2025 outlook for operating expenses, but second quarter adjusted EBITDA was a big beat, coming in at $549 million. Second quarter net revenue also beat at $989 million. Once again, shares higher by about 4.5%.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.